Good morning and welcome to the Street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us. Coming up on the show today, Brian Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James, will be joining us for the hour. Then in 30 minutes, we're exploring how traits that make women hesitant about investing may actually make them better investors with Kelsey Dunwoody, Portfolio Manager and COO at Dean's Knight Capital Management. Plus, we want to hear from you this morning on First Call. Reach out with your questions, and we'll have Brianne answer as many of them as she can at the end of the show. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. Our email is firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. Well, Prime Minister Mark Carney and Japanese Prime Minister Sanae Takaichi signed a comprehensive strategic partnership in Tokyo aimed at deepening cooperation in defense, energy, and technology. The deal comes as Canada looks to expand LNG and other energy exports to Japan and strengthen defense ties in the North Pacific and Arctic. Japanese officials have also stressed that continued investment in Canada's auto sector depends on a successful review of the Canada-US-Mexico trade agreement. Aecon Group beat analysts' expectations with stronger profit and revenue as infrastructure demand and new contract awards boosted results. The engineering and construction company's revenue climbed to more than $1.5 billion, while the company also increased its quarterly dividend. AltaGas posted profit of more than $560 million, beating analysts' estimates. Revenue rose more than 1% year over year to about $3.3 billion. The Canadian energy infrastructure company says results were driven by strong liquefied petroleum gas export volumes to Asia and higher contributions from its utilities business. And now our top line story as the war in the Middle East widens and lengthens, the U.S. and Israel hitting deeper into Iran. U.S. President Donald Trump saying he must be involved in picking Iran's new leader, and Canadians in the region are hearing about a way out. CTV's Adrian Goldberg with more.
The screams of young children can be heard as one of two Iranian drones slams into the ground near a school. A second hitting this airport terminal. Azerbaijan's president has vowed to crush Iran with an iron fist after he says 4 drones were fired into his country. Iran has denied any connection to the attacks, instead blaming Israel.
Iran is exporting the war, trying to expand it to as many countries as they can to sow chaos.
In Tehran, an ever-intensifying onslaught from above rocked the city for a 6th straight day, where more than 1,000 people are now said to be dead. In parts of Beirut, concrete carnage where neighborhoods once stood. Traffic jams now line the streets with panicked civilians after the Israeli military ordered the evacuation of hundreds of thousands from the southern suburbs of Lebanon's capital city. This all comes as confirmation from Rome today that Italy is sending air defense systems to the Gulf. Spain also announcing it's sending its Christopher Columbus frigate to Cyprus to join a French aircraft carrier and Greek naval ships. Great Britain now has 4 fighter jets en route to Qatar. With each passing day, more NATO members are being drawn in.
It's affecting us. It's affecting the entire globe. This is a global conflict.
CTV News is currently stationed near the Incirlik Air Force Base in the southern Turkish city of Adana, along the eastern Mediterranean, where Turkish and U.S. NATO air forces have been stationed for decades. Just yesterday off the coast of the NATO base, an Iranian ballistic missile was shot out of the sky by NATO forces as it entered Turkish airspace. While Iran has denied targeting Turkey, one former NATO commander says he has little doubt about the aim of that Iranian missile.
They're going after that airbase by design. Ballistic missiles are aimed. They know what the flight path is. These Shahed drones are aimed. They know what the flight paths are. This does not happen by mistake.
And make no mistake, this is now a conflict forcing the hand of several NATO nations across the globe. The multiple drone strikes on Azerbaijan makes this the 12th country to accuse Iran of firing deadly warheads in their direction since this war began. Adrian Gobro, CTV News, Adana, Turkey.
All right, the war has unleashed a wave of disruption across energy markets and markets in general. Oil heading for the biggest weekly surge since 2022, with shipping through the Strait of Hormuz at a near total halt. For the latest, let's bring in our guest for the hour, Brianne Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James. And Brianne, thanks as always for joining us and sticking for the hour here. This is what everybody is talking about. Let's get your initial thoughts now that we're a week into this.
Yeah, thanks for having me as always. I mean, it has definitely taken headlines. And I think, as you mentioned, we've seen that oil volatility really pick up, and these tensions with Iran have risen. So shipping through the Strait of Hormuz, has reportedly fallen 70 to 80%. And that's really tightening the global supply expectations. And that's because roughly 20% of global oil flows through that corridor. So prices have been reacting quickly. We saw Brent move back above that 80, energy stocks followed, and even the energy sector ETF was up about 24, 25% year to date. And that's really where we see Canada becoming an interesting opportunity from an investing standpoint. When geopolitical risk rises, buyers really prioritize stable and reliable suppliers, and Canada stands out in that front. So the resource base is huge in Canada. We hold about 170 billion barrels of proven reserves and mostly long life oil sands that can produce steady for decades. So the economics also work at these prices. Many oil sands project break even around that $40 to $50 per barrel. So oil near $80 generates strong free cash flow. And that cash is increasingly returned to investors through dividends and share buybacks, really showing much more disciplined sector than we've seen maybe in past cycles. So even though most Canadian oil goes to the US, we are seeing demand that is remaining strong because many US refineries are designed for heavy crude when Canadian producer supply is consistent.
Now, I mean, they love the stability of Canada, but I guess the question they're looking at is, how long is this going to last? We heard comments recently, just this morning, from U.S. officials saying this could be over in a few weeks. And then we had the Qatar energy minister saying, hey, if we have to shut down production, we'll see $150 a barrel. But I guess, are investors ready to just jump into Canada, or do they want to wait a little bit and see what happens in the Gulf first?
Yeah, I mean, before any of all of this geopolitical risk kind of happened, we did see the energy sector extremely undervalued in Q4. I started saying we were more bullish on energy, just looking for value in the markets of where you could see potential price appreciation when the markets was a little bit stretched. So, yes, this has helped pop a lot of those energy stocks as well. But as you mentioned, is this going to be short term? Can this be a tactical trade that people can, participate on the upside, take some profits off the table, and then continue to diversify their portfolio through 2026, as we do expect additional volatility to continue. But, the chances, I think I've read a few times, it's about, 50, 58% that, that this happens until September. But it could be, weeks, as you mentioned. So right now, no one has a crystal ball. No one really knows how long this is going to go. I think it's being active and dynamic and being able to pivot if you need to, if the changing dynamics do change. But I do think, Canadian energy has participated, and there are some still great Canadian stocks that we think are good opportunities to be participating in for this rally.
All right, we're going to be talking about a few of those coming up. But also in this is the Canadian dollar. The U.S. dollar is strengthened on everything that's unfolding with the energy, but the Canadian dollar as well with the energy. Is that good, bad? What are your thoughts on that?
Yeah, we see this again. I think it's a little bit more of a short-term blip. with the rally that we are seeing and some of the uncertainty. I mean, a lot of people, even the retraction of the US dollar we saw last year off the peaks and even through this year to start the year. But now we're starting to see, as you mentioned, this short-term rally in both the Canadian and US dollar. And I do think that is a little bit more on this fleet of safety too, right? Like safe currencies and, you're seeing the same thing with gold and safer asset classes. And both Canadians and US and globally, I mean, the US dollar is still one of the largest, strongest currencies. So even though we saw, a pullback last year off the peak, the US dollar down about 9%, we still think that they are safe currencies globally. And this is more of a short-term play on that currency side.
All right, Brian, we have to go to a bit of a break, but I know you're sticking around for the hour. Thank you for that. Brian Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James. Up next, we'll take a look at the markets before the bell. Time to see how things are shaping up on the markets. We start with U.S. futures, and investors are awaiting the February non-farm payrolls, which is expected to be weaker. And the market's right now off. Of course, everything with oil surging again today. It had been flat overnight, but it's surging again this morning. And you can see the Dow off by 0.55, the NASDAQ by 0.77, the S&P 500 by 0.57. Heading over to Asia now, and some green there. Good to see that, mixed over the energy concerns, but up for the day. The Nikkei 0.62, the Hang Seng rallying nicely, 1.72%, and the CSI 300 up by about a quarter point. Off to Europe now, and different story there. Everybody off, cyclicals and some tech and industrial stocks were helping lift the market earlier, but that has changed now. All of them deeply into the red. The FTSE 100 off by 0.75 of a point, CAC 40 by 0.88, and the DAX off by 0.9. TSX yesterday off again. The energy sector was positive, but the market was dragged down by materials and banks. So the TSX ending the day overall off by nearly a full point. Some of the movers and shakers: Methanex up 7%, Strathcona 5.65% going the other way. Yeah, copper taking a hit yesterday. Arrow Copper off by 9, Capstone Copper 9.65. Heading to the metals, and some positive in the wash. Gold up by 0.1, hovering around that $5,100 mark. Silver back over $82, up 0.11, and copper's up slightly. Not much movement right now. It's kind of flattened out for the moment. And oil yesterday, another surge for Western Canadian Select. The differential narrowing again. It was up 8.3%. And let's see what WTI is doing today. Yeah, look at that, above $85, up 5.5%. Well, Prime Minister Mark Carney is wrapping up his trade tour with a final stop in Japan. He met with Prime Minister Sanae Takaichi in Tokyo. Carney and Takaichi unveiling a series of agreements as part of their sit-down, including a goal for Canada to increase the flow of liquefied natural gas and liquefied petroleum gas to Japan. Carney pledged to expand energy trade and military cooperation as well. All this comes on the heels of his trip to Australia and India. In Australia, Carney addressed the Australian Parliament saying, quote, "In a world of great power rivalry, middle powers have a choice: compete for favor or combine for strength." For more on Canada's trade relationships and this trip, we turn to our guest for the hour, Brian Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James. Brian, your thoughts on the trip and this most recent announcement?
Yeah, I think, this is showing why Canada is really becoming a critical trade partner. I think the global trade we've seen is shifting as countries are trying to rely less on geopolitical risky supplies. And that's why Prime Minister's, Indo-Pacific trade mission to India, Japan, and Australia is really getting a lot of attention. The region is huge economically. The Indo-Pacific represents about 40% of the global GDP and over half of the world's population. And really that we're also expected to see that drive much of global growth. So energy security is a big issue there. Japan and South Korea, are important. They're more than 90% of their energy, which makes reliable suppliers like Canada, like us, very valuable. And Canada can supply, exactly what many of those economies need: oil, LNG, critical minerals. So the big focus is now going to be on supply chains and those critical minerals. It's already the fourth largest oil producer and one of the world's largest potash exports. So, we're also seeing new routes develop. The LNG Canada in British Columbia is now shipping cargoes to Asian markets, and that's creating a direct energy link. So all of these ties into really diversification for Canada. Canada still sends about 75% of its exports to the U.S., and so strengthening this Indo-Pacific ties can really help open new markets while reinforcing Canada's role as a stable global supplier.
But the pressure, we have all these things, we've talked about all these things, but we're not really doing anything with all those things. The pressure is now really on the Prime Minister when he comes back to start getting, shovels in the ground is really what needs to happen. Is there a stomach for that from the private sector too, do you think?
Yeah, I agree with you. I do think that a lot of it now is in his hands on what that looks like and how this all unfolds. Will we see the private sector participate? We have seen the private sector a little bit more muted than normal, but we have started to see a little bit of a pickup in the private sector that could potentially help as well. So I think that will be a little bit of a time will tell on that to see the development on how this all unfolds. But in the latest too, Canada and Japan, right? They're deepening specifically on energy as well. And I think upgrading their relationship, and the latest news on them is that Canada and Japan announced that comprehensive strategic partnership. So that's really signaling too, the deepening economic security and trade alliance between Japan and Canada. And the goal really is, at the end of the day, is to strengthen, cooperation across defense, technology, energy, supply chains, and trade. So Canada is trying, and we are seeing the Prime Minister trying to strengthen ties with a major democratic ally in the Indo-Pacific region, which is increasingly important for our global trade and global stability. So we really do need to expand that. And I think for Canadian investors, the practical expression is, the theme is that we are seeing names like Enbridge, the pipeline infrastructure, Cameco, uranium, Nutrien, potash, LNG linked producers. These are companies that would benefit directly from this deepening Indo-Pacific trade ties. Yes, the tariff tensions in the U.S. actually strengthen this narrative as well, but the more uncertain the Canadian-U.S. trade relationship becomes, the more urgency there is to really develop alternative export routes. And this is a policy driver, not just an economic one.
I just want to get your thoughts on, going back to Australia for a sec, the announcement that pension plans are working on an agreement. Do you think we'll see Canada and Australia have some of the biggest pension plans in the world? Do you think we'll see more investment coming our way from Australia because of that agreement?
Yeah, that's an interesting point. I don't know all the details on the pension plan, but I do think that would be a great opportunity for Canada, and for our expansion in that area. We do have, a lot of pension plans. We do have a lot of, even seniors who are dependent on these pensions as well for, the next 15, 20 years. So this could be a great opportunity for a lot of those large companies to take advantage of if we can create this alliance with Australia. So again, I think that would be a great opportunity for Canada to tap into that market.
Okay, we have to take a break right now, Brienne, but we'll be back with you. Brienne Gardner, Senior Wealth Manager at Velocity Investment Partner Raymond James. We're going to see why Aritzia is on her radar. Time to see what's on the radar for Brienne Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James. And there's a few that you are watching right now, Brienne, but we'll start with Aritzia.
Yeah. We were talking with International Women's Day. I thought I would pick a great fashion company, Canadian-based, Aritzia, and it's still a Canadian female-focused fashion retailer. They do have real institutional momentum, though. We saw BMO upgrading in early 2026, citing they're accelerating their U.S. sales, both across their digital platform and their boutiques. So we also saw active share buybacks underway. Analyst consensus have about a $140 price target. And so for us, the Canadian growth story with the connection we have built by women for women. I love this story, and I think there is still more upside in this consumer discretionary stock. It's looking about 28% upside from here, ranks a 9 out of 10 for us. So, I think this is a great company that still has some momentum left in it.
And any potential headwinds, any concerns about the economy with it?
Yeah, consumer discretionary stocks can always get hit, at least in the short term, when there is some geopolitical risk or potential recessionary concerns. But again, I think the diversification that Aritzia has done by shifting more, sales into the U.S. and globally, I think that they can sustain, even if Canada does go into a mild short-term recession once we get Q1 GDP data. I think the company can still weather that storm and come out of that ahead.
All right, let's move on to Advanced Micro Devices, another woman-led company, and you like it.
Yeah, I think, again, CEO Lisa Su is arguably really one of the most celebrated, I think, female executives in technology today. Obviously direct competition too. AMD has done very well with their microchips. And also NVIDIA, but she has really turned AMD from, almost near bankruptcy into an AI chip powerhouse over the past decade, which is great to see for a company like that. The stock has pulled back from the highs, but we have seen a lot of profit taking and a lot of this rotation out of some of the tech leaders into more, the value plays. And, in honor of International Women's Day, this is, again, a woman that is really leading the AI revolution. So I think this is a great business, great company, and the business thesis on this and this leadership story both continue to hold up. Ranks at 8 out of 10 fundamentally for us, this stock. And still, analysts on the street have about an upside of a price target 289, so still 45% upside from here. And most analysts are ranking this stock a buy still at these levels.
And what do you feel is Sue's strength for her to turn a company like this around over the last decade?
Yeah, I think coming into it, we had seen AMD pretty muted for a while. And I think having a strong leadership in place can really turn a company around, not just motivating the employee, but having a different mindset. And I think, again, focused on where the future is going and making those changes within the company, the people, the products, the processes, and then adapting and making sure that the company has the softwares and tools to be able to be a leader in the industry. And she has done just that. All
right. And last one, we've got about a minute, Enbridge.
Yeah, Enbridge, again, great company, I think, with the Strait of Hormuz in crisis. North American pipelines and infrastructure is really back in focus. And Enbridge is one of those names and is the backbone of the continental energy security. So moving the oil and gas across Canada and the U.S. at a scale. If the Middle East supply routes do remain stressed, the strategic value of this infrastructure only continues to grow. They have a great, strong dividend, stable cash flow, and really directly tied to today's top line story that we've been talking about. So we still like energy. I hold energy in Enbridge in our portfolio and continue to be bullish on this name.
Okay, we'll wrap it up there, but lots still ahead, including why the traits that make women hesitant about investing may actually make them better investors. And our phone lines will open soon for our first call segment. Call us at 1-855-326-6266 or send us an email, firstcall@bellmedia.ca. Prime Minister Mark Carney and Japanese Prime Minister Sanae Takaichi signed a comprehensive strategic partnership in Tokyo aimed at deepening cooperation in defense, energy, and technology. The deal comes as Canada looks to expand LNG and other energy exports to Japan and strengthen defense ties in the North Pacific and Arctic. Japanese officials have also stressed that continued investment in Canada's auto sector depends on a successful review of the Canada-US-Mexico trade agreement. AltaGas posted a profit of more than $560 million, beating analyst estimates. Revenue rose over 1% year over year to around $3.3 billion. The Canadian energy infrastructure company says results were driven by strong liquefied petroleum gas export volumes to Asia and higher contributions from its utilities business. Shares of Marvell Technology are soaring in the pre-market after the company adjusted earnings beat analyst expectations. The company's data center revenue in the quarter was more than $1.6 billion US, a 21% jump from the same period last year. Marvell also boosted its 2026 revenue outlook driven by robust AI demand. Looking at the markets right now, and everybody's in the red. Oil dictating how things are going right now. It is up around 85 and Dow off right now, 0.68, 0.69. NASDAQ nearly 0.9, and the S&P 500 down by about 0.7. Well, International Women's Day is Sunday, and we've been looking at how women can feel more confident stepping into the investing world and why some of the traits that make women hesitant may actually make them better investors. Joining us now is Kelsey Dunwoody, Portfolio Manager at Dean Knight Capital Management. Kelsey, thank you very much for joining us today.
Good morning. Thanks for having me.
Let's talk about some of the traits that some people may look at being a weakness, but you say no, these can actually be a strength for women.
Yeah, I mean, first of all, as Brianne and I would know, every woman is different, but the stereotype is that we're cautious and risk averse. And I think, traditionally with investing, it's about taking on risks. So women aren't naturally seeing themselves from a young age as being, people who possess the traits of an investor.
And Brianne, I know you want to join this conversation.
Yeah, Kelsey, so glad to have you and welcome. Happy International Women's Day. I think we are seeing, as this massive wealth transfer happening globally, especially over the next decade, with really women expected to control a growing share of assets. I think the stats are, over the next decade, nearly 70% of the 124 trillion global wealth transfer is expected to go to women or to females. So, how do you think that will change the way capital is invested or, the shift to female investors?
Yeah, I'm not in the business of predictions. I really try to avoid that. But I think what, we're going to see happen, and, a credit to people like yourselves, Brianne, is, we are moving towards a world of stewardship and really having a personal investment philosophy. And some people do that on their own, but a lot of people work with advisors like yourself or my firm here, Dean's Knight. And women are really good at working with a team. And they don't walk into a situation thinking that they know everything. So, it lends itself to working with professionals. And I think that we are at a time where the advisory business is outpacing the sort of stock brokerage business. And not sure what it was like for you growing up, but for me initially, I would have never thought that I would be sitting in this room doing this, because what we saw on the media was the stockbroker trader making big bets. It's a world that seemed just not really accessible or appealing. But when we reframe the conversation to be, what you're doing here as a woman for yourself, for your family, for your, charities that you want to support, is really stewarding the capital, then I think the conversation is a lot more accessible for women.
Yeah, and we all often see that, even in our own practice as well, as you mentioned, women who stay invested or stay more disciplined and don't react, through these cycles, they do end up outperforming. And there are some stats on, female investors versus male investors. How do you see this and attracting more female investors or females to start to investing?
Yeah, I mean, we work in this every day, so it's sort of like the fish who swims in the ocean doesn't realize what water is. But, people who aren't investing every day, they might not realize that all of the decisions you make, it's the time in the market that's the most important. So if you can start, and not to make any women feel like it's too late, but if you can start following an investment discipline sooner in your independent career, then you have a better outcome over the long term. And that's just because, when we stay invested in the market, yes, our investments will go down. We always have market events and corrections, but they will go up. Every correction over time has had a recovery. So you don't want to be sitting on the sidelines. And what the studies show, and what I've seen in my practice, and let's be clear, still the majority of the clients are men. Every time we bring on a woman, we're excited. And increasingly, spouses or significant, females, whether it's daughters or CFOs, are coming into the conversation. But, women tend to not panic in the corrections. And that's really where the differences are made. So instead of just selling on fear, they pick up the phone, they call an advisor, or they call a trusted friend, and they're reminded, hey, Brianne, you didn't make this plan for, the next 2 weeks. You made it for 5 or 10 years, and your assets are allocated in a reasonable manner. And this is not going to undo everything that you have accomplished up to this point. So trust the process, trust the plan.
I just want to jump in. You mentioned about younger women. We're seeing more and more young investors coming in. Are we seeing more young women come in to invest as well and do it on their own and with more confidence?
I don't actually have the data in front of me for that, but I do believe that is what's proving out. And, the lower cost trading platforms and companies that are helping investors get online and set up are definitely attracting youth overall, not just women. Of course, my caution would always be is if you're doing it on your own, again, when you're young, mistakes can be made up, but you want to make sure that you're learning from those mistakes. And it's not just, hey, I picked the wrong business here, it didn't work out. It's also, what were my emotions around that? How did I react when I got bad news? Because the psychology of who you are as an investor is going to be something that really dictates how you proceed as you continue to get more and more wealth to invest over your lifetime.
All right, Brian, we have about 1 more minute. Last question to you.
Yeah, I think this would be great for women watching, or for women who may feel more intimidated by the markets or think they need a large amount of money to start investing. And as you mentioned earlier, there's never a late time to start. Just get started. Really, what's the one thing you wish more people understood about getting started?
For me, I think getting started is just take whatever you have and go to any trusted Canadian institution and get an index fund if you're afraid, right? We know how the indexes perform over time. Start participating and getting a little bit going. And as you grow as an investor, you might decide to make decisions on your own. But one thing I'll just say before we wrap up is it's actually the not making decisions or just being patient that pays off over time. So, all of us admire Warren Buffett, and some of the things, not following the crowd, being patient, ignoring the noise, all those traits that make him a great investor are very common traits in female investors. So, if hopefully, there's a lot of future Warren Buffetts out there if they just go and start today.
All right, Kelsey, we have to wrap it up there, but thank you very much for joining us today.
Thank you so much. Happy International Women's Day.
Kelsey Dunwoody is the COO and Portfolio Manager at Deans Knight Capital Management. Still ahead, today's market drivers with Bloomberg's Dina Balji. And, of course, our phone lines are open. Brianne Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James, is taking your questions. You can reach us at 1-855-326-6266 or email firstcall@bellmedia.ca. Time to take a look at some early market movers. We're joined now by Divya Balji, managing editor for Breaking News in the Americas. Divya, thanks as always for joining us. And Marvell Marvelous?
Yeah, Marvel is what I call it, at least. This chip maker, one of the last few big companies to report earnings towards the tail end of this earnings season. Really, really good results. Very bullish outlook on its sales for the year. They are citing, very strong data center demand. First quarter revenue, or what the forecast is for that, they've put it at about $2.5 billion when analysts were expecting about 2.28. So that's blowing past expectations. They've also boosted their own full year revenue guidance. They're now putting it at nearly $11 billion when they had originally said $9.5 billion. Now that's why you're really seeing the shares up more than 10% in pre-market trading and even yesterday in post-market trading. As we all know, this whole AI boom, people are putting money into it at this point. There are several analysts that have raised their share price target after the company reported earnings yesterday. Some of them are even saying that perhaps this guidance is still a bit conservative. So that's also quite interesting that they're actually expecting an even further boost down the road, or when they do report the first quarter numbers, it could actually be better than the forecast that their own company has given. So overall, good news. I mean, we've seen a lot of companies, AI companies or AI adjacent companies report earnings, and some of them have been punished, but in this case, they're doing very well.
All right, the gap, though, missing the gap. We're leaving a gap. I don't know. I'm trying to think of puns today. It's a Friday.
Mind the gap.
Mind the gap is another one. That's a Toronto one, isn't it?
Yes, or a UK one with the whole subway system over there. But I would say that, with this company in particular, they have been struggling for a while. Their biggest brand, Old Navy, and their smallest brand, Athleta, both missed expectations. But, Gap and Banana Republic actually beat expectations. Athleta in particular is the brand that the new CEO, or somewhat new CEO at this point, has been trying to turn around. He himself has come out and said that sales has been disappointing for Athleta in particular. I think this is the real overhang when it comes to Gap, the fact that we need to know what is this uncertainty out there. What are their plans to turn it around? Can they actually get there with higher competition? So not a great day. I think stock is down almost 10% in pre-market trading.
Okay, we'll have to wrap it up there. Divya, have yourself a great weekend. Divya Balji, managing editor for Breaking News in the Americas. Still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, including Netflix. Time to take a look at some notable analyst calls and recommendations. Netflix is one of them, upgraded to buy from hold at CFRA, a move that follows the streaming video company dropping out of the fight to buy Warner Brothers Discovery. Analyst Kenneth Leon cites the absence of earnings dilution and outsized new debt by walking away from acquiring Warner Brothers Discovery. PT, $115. DHL Group is raised by analysts at Barclays and BofA who see tailwinds from the Middle East conflict for the German logistics company's earnings. Analysts led by Marco Limite upgrade the firm to overweight from equal weight with a PT of 54 euros. They see logistics firms having asymmetric earnings sensitivity to disruption versus demand, with control of physical assets becoming critical during periods of high supply chain complexity. KBW raising a recommendation on UBS to market perform from underperform, BNP Paribas to outperform from market perform, and Crédit Agricole to market perform. Analyst Tom Hallett notes investors need to be agile and adjust positioning accordingly as momentum shifts between banks. The PT for UBS is unchanged at 34 Swiss francs, implying an 11% increase from the last price. And when we come back, Brian Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James, takes your questions on First Call. Time for First Call, and in this case, first email. It is from Ruth. I used to love Lululemon's leggings, but I feel like the quality has slipped, much like the stock. Is Lulu still worth buying, Brienne? Stockings, we got all kinds of puns going on here.
Yes. I still love the comfort of Lululemon. Unfortunately, yes, their stock has not been participating. I mean, down about 50% over the past year. And the stock has really been struggling. They are preparing to release their Q4 and full year results in mid-March. And I think investors are going to be watching very closely after a volatile year for the stock. We have seen the company seen strong international growth, especially in China, but weakness in the US market. And that is really impacting the stock. The major product refresh in 2026 is expected to help reignite and grow and bring customer brand in, but it's still, I mean, they still remain a premium athletic brand, but investors really want to see the US demand stabilize and margins recover. So right now, yes, it's a little value, we're a little cautious on the stock, but analysts still see upside from here if they can figure out this US play at the time.
And I was just pulled this up, Chip Wilson has launched a new campaign website as he continues to battle this. That's probably not going to help. It was revealed on Thursday. Of course, he's accusing the board of weak governance. He says he's using the website to outline his view on the scale of change he believes is needed at Lululemon. I mean, that must be having a huge impact.
Yeah, I think their leadership changeover a few times has had some impact. And again, we have seen the stock feel that. I think analysts across the board are at like a hold or waiting. Yeah, price target upside about 20%. Again, this is a stock I'd stay away from until I see some strong conviction, some leadership change, and some more demand stabilizing out of the U.S. before I got back in here.
All right. Next up, let's go to an email from Marion. I'm interested in taking a position in the makeup industry, looking at Estee Lauder, Ulta, and ELF. Any thoughts?
Yeah. e.l.f. Beauty, I think, is a great...
Is it e.l.f. Beauty? I just showed myself there. Is it e.l.f. or ELF?
Oh, that's okay. Right. I mean, maybe the younger... I don't know. It could be ELF. I've heard people say e.l.f. It could be either or. You might have just a little bit, but that's okay. So, we had seen a big pullback in 2025 on the stock, but since then has kind of stabilized and trended sideways. Fundamentally, the stock still ranks at 8 out of 10 for us, but from a value score, we're looking at a 2 out of 10. Analysts are actually rating this a buy or outperform, see about 36% upside from here. They do have, great discounted price, clean, vegan, cruelty-free cosmetic, which I think is, a big trend as we're starting to see that market shift. So I do like the stock longer term. Again, I would wait for a little bit of a turnaround before I got in the stock, but I do like e.l.f. Beauty, and I think they will have a good long-term run.
All right, their ticker is ELF. We'll go with that. That's what I was reading there. And what about Estee Lauder and Ulta?
Yeah, Estee Lauder, again, I think a bigger beauty brand there, EL there. And I think they are a little bit more stabilized, manufacture of skincare, makeup, fragrance, hair care product, big, Clinique, all of those, MAC, Bobbi Brown for the ladies out there, have had a recent pullback on the stock price, but, still see about 15% upside from here. For me, it's a little bit of hold. Some of these consumer discretionary stocks, have felt it on some global risks and some of those concerns. And unfortunately, I think a lot of these beauty names are feeling that too. But Estee Lauder, very reputable brand, and again, I think could turn around and have a great performance in the long run as well.
All right, this next email is from Carolyn and says, Brienne, can I please get your thoughts on Victoria's Secret? Is it risque right now?
Love that. Victoria's Secret also for International Women's Day, great company, and I think one that has it is a little bit risque, as you said. Looking at the stock, 1 year we've seen the stock perform 137%, 24% upside from here. The company beat Q4 earnings expectations, and I think earnings per share around that $2.77, revenue, $2.27 billion, and comparable sales up 8% in the quarter. So even despite those strong results, the stock dropped sharply, reason, and really because investors are a little bit worried about higher expenses and tariffs in 2026 and the cost of those. So we are seeing management, guiding 2026 sales to roughly that $7 billion as they are pushing to turn around the strategy focused on, more the lingerie, the PINK brand, and the beauty project. So, overall, the retail demand is, showing some weakness, but we do see some improvement if we can see these cost pressures and tariffs that are hitting their margins start to turn around, which is why investors sold the news on Victoria's Secret.
Okay, and we're almost out of time. We were going to get in one more email about Costco. Just quick 20-second thoughts on Costco.
Yeah, Costco, great reputable company. They just reported strong Q2 earnings, beating analyst expectation. Revenue rose about 9% year over year. Comparable sales were up almost 8% globally. Within Canada, especially strong, 10% growth. I love Costco. Membership revenue, the most profitable part of the business, rose 14%, and renewal rates close to 90% worldwide. So they continue to benefit from this trade down. Consumers, even higher income households, are shopping there for value during this economic uncertainty. So I think Costco is a great staple to have in the portfolio.
All right, we have to wrap it up there. Brianne, thank you as always for joining us.
Thank you for having me.
Brianne Gardner, Senior Wealth Manager at Velocity Investment Partners, Raymond James. Andrew Bell's up next with the open trading gets underway in just over 30 minutes. Hold on, it could be an interesting one. Have a great day.